right, that is some important global market opinion that we are tracking. But let's now talk about all of the cues and how they are looking as we get into this fresh trading session. We have our research team here with the trade setup and all of the stocks that you should keep on your radar today. Nigel, Ekta, as well as Vahishta all join me now. Guys, a very good morning to all of you. And Ekta, let me come to you first. Take us through the market cues we should watch. The global setup, once again, not looking too great.
Morning. Well, yes, absolutely. Like you mentioned that the global indices are weak again in today's trading session. So that's probably going to weigh on sentiment. But yes, the markets did close higher after slipping in the last two sessions for the Indian markets. The Sensex rose over 450 odd points. We have the Nifty, which rose around 150 odd points as well. FII's net sold around 538 odd crores. DII's net bought around 697 odd crores. So net there was a buy figure that came in from the institutions. Now, global markets continue to mull the recession risks. That's basically the larger theme which is playing out due to the lack of cues as well. That seems to be the central theme at this point in time. So the US markets did close lower in yesterday's trading session. There was some data which did come out from the US, such as the home builder sentiment, which dropped for the 12th straight month and which was the lowest since 2012. Asia, largely lower, like you have been talking about, and this is despite hopes that there could be a revival in the Chinese growth going forward. SGX is indicating a largely flattish start with a bit of a negative bias at this point in time. Oil has risen overnight as well on the back of optimism on the Chinese economy, but the recession fears seem to be capping any kind of upside, which would definitely be a good thing for us in terms of a net for the macros. The street will continue to hope for a Santa Claus rally, so let's see whether that comes through or not. There will be an IPO opening as well, so do watch out for any kind of traction on that one. Ellen Electronics, and separately data this next couple of days will be inclusive of the RBI minutes back home as well as the US Q3 GDP data.
All right, Ekta, thanks a lot for putting all of those cues on the table. But let's now also talk about the individual names that we should keep on our radar as we get into this session. Vahishta is standing by with that entire list. Vahishta, good morning.
Good morning, Pavitra. Let me start off with IRB Infra, which will be having a board meeting on the 4th of Jan to consider a stock split. Moving on to Sterling and Wilson Renewable Energy, when the promoter, Mr. Kashid Daruwala, will be selling up to 1.58% stake via an offer for sale. Also, promoter Shapurji Palanji and company will be selling 3.69% stake in Sterling via an OFS, and the floor price for the offer will be 270 rupees per share. Moving on to NBCC India, the company has won an order worth approximately 70 crores. The company has received a contract for the construction of a new multi-storied quarter complex from the Odisha Power Transmission Corporation. Ipca Laboratories has acquired an additional 6.53% stake in Trophic Wellness, which is engaged in the manufacturing and marketing of several SKUs of the nutraceuticals under the brand name NutriCharge. And with this, Ipca Labs will now hold 58.88% shareholding in Trophic Wellness. Just Dial, the news is that Reliance Retail Ventures Limited, which is the promoter, intends to sell 2% equity shares of the company for the purpose of complying with the requirements of the minimum public shareholding. And the last stock is Dabur India, wherein the news is according to CNBC Awaaz. The promoters are likely to sell shares worth 800 crores via a block deal today, and this is likely at a 4% discount to the current market price.
All right, Vahishta, thank you for taking us through all of those stocks that we should have on our radar. Finally, let's also talk about all of the cues from the futures and options space. And Nigel is joining us with exactly that. Hi, Nigel.
Well, morning. Seems like Santa Claus wants to visit at least the Indian markets, because yesterday we were outperformers. We did pretty well in trade and we ended virtually at the high point of the day. So Monday was a good session for us. The Nifty went ahead, took support at around the 18,250 odd, which was the day's low. And we did see a defense from there on. So we did recover substantially. One school of thought was maybe we're going to go back down to around the 50 DMA. That would be another 150-point correction from yesterday's low. Well, that didn't happen, so that's good news. Nifty heavyweight stocks, whether it was ITC, HDFC, Reliance Industries, well, they more than compensated for the weakness that we saw in IT names yesterday. While the Nifty Bank, it saw a bit of a consolidation. Why did we move up then in trade? Well, there was clearly a short covering bounce that played out. The Nifty moved up, the open interest was low, so that's telling you there was a bit of a bounce, and that perfectly ties in with what the FIs did in the F&O market. So on the index futures itself, well, they covered close to around 13,000 short contracts. Now that's good news. On the option side, well, they bought more calls than puts. But for me, the positive is they're writing puts yet again. telling you that at lower levels, they believe that there is some support that's playing out there. And what were they writing in trade yesterday? The 18,300, 18,200, and 18,350 put. Just take a look at that. All of them together, close to around 85 lakh shares added. So there was put writing that was evident yesterday. On the upside, though, we did see that the calls that were written, well, they got unwound yesterday. So there was some kind of fear among the bearish sentiment itself in trade. We're not out of the woods, but for a fresh breakout, we'll have to get past the 20 DMA on the upside. The 50 DMA, well, that comes at around 18,100. That's a line in the sand, actually, in terms of support levels. But I'll say yesterday's low, well, that should be your first stop loss, because we bounced off that level. So the SGX Nifty suggesting a bit of a downtake to kickstart trade. Maybe if you get a deeper gash, maybe a 50-60 point downtake, then in fact, maybe you could look to get into the index. But otherwise, we're in this band of around 400 points, 20 and 50 DMA. Back to you.
All right, Nigel, Ekta, Varishta, thank you very much for joining us and prepping us up for this trading session. With that, we're going to get into our first break on the show. But up next, like we just told you, promoters of Sterling and Wilson look to sell stake in the company. We'll get you all of the details when we come back.